Hey, what's up, military millionaires? I'm Dave. I would say host, but this isn't actually a podcast. So what I wanted to do today is John and I, and you all know John from other videos, but John is a lender with Cross Country Mortgage. We realized that the VA renovation loan just has a whole bunch of I won't say misinformation, but misunderstandings out there. I've done a video or two about it, and I get more questions about this loan or renovation loans regarding the VA than pretty much anything out there. And so we wanted to kind of come together and provide some information. And we were talking about what's the best way to add some value and answer some questions. Well, we thought, why don't we have Victoria Dowling, who is the VP of renovations for Cross Country Mortgage. So top of the top as far as renovation loans and renovation lending, come on and give a brief overview and then answer some questions for us. And then we're also going to go live in the Facebook group later and do some more Q&A, and I'll probably post that video as well. But we thought, well, there's probably no better way than bringing in the person who runs the programs for a major mortgage company that I love. And in fact, probably have a statement around here because they've done one of my mortgages recently. Come in and talk about it. So without further ado, Victoria, thanks for joining us today.
Thank you guys for having me today. So I'd love to start by just kind of walking through what the VA renovation loan can do and talk a little bit about how that process works, just at a high overview. And then we can jump into any questions you guys have and talk a little bit more about that in detail. But I love the VA renovation loan. It's such a great opportunity to be able to use 100% financing to purchase and renovate a property. And so we all know that VA has certain requirements for the property. It wants it to meet minimum property standards, which is super important. And the VA renovation loan really allows you to be able to get all that stuff done as part of your financing. And you could even get some things done that maybe aren't required, but that you want to do. So right now we're seeing lots of people do things like new roofs. Maybe you got a few years left in it, but you don't want to have to worry about 3 years from now having to spend $5,000 to $10,000 on a roof. Or maybe you want to upgrade your heating system or your central air system. So people are really using this to do cosmetics, to do big ticket items, or just to be able to take care of those minimum property standards. Because I know so many veterans too are really handy. So you might plan on doing a whole bunch of renovations down the line, and you want to be able to get in and take advantage of that property that's listed under market because of the condition it's in. And so this type of financing really allows you to do that and still use your benefit and get that 100% financing all in one. Super safe 30-year fixed mortgage. And it's really not that difficult to do. So the process itself, if you have an offer accepted, you would get an estimate from a contractor. You can use multiple contractors, but we only need one from the contractor you want to work with. And once you have that bid from your contractor, we have an appraisal done so that you know what that value would be once the work is complete. So you have the security of knowing, yes, my house is going to be worth what I'm spending, not only to purchase it, but to renovate it. And then after closing is when the work begins, and your contractor would start work and get paid in installments. Ideally, this is used for projects that are on the smaller size and can be done within about 60 days after closing. So that's just a kind of a quick overview of what the program lets you do and how it works.
I love that you mentioned the roof. So when my head thinks of this as an investor, I'm thinking I could add a bedroom, or the kitchen needs to be gutted, or, which is all very realistic. But it hadn't even occurred to me in the 2 or 3 years I've been talking about the fact that there is a loan like this, that it might just make sense to do exactly that, right? And you buy a house and you're like, well, the house is great, the bones are great, everything's great. But if I could get a new roof, then I don't have anything to worry. That takes CapEx out of the equation for, 5 years down the road. That's pretty cool.
Yep. Yeah, you can do. And another thing people don't usually think about are appliances. You can do the fridge, the stove, dishwasher, washer, dryer. So it's really flexible on what you can do.
Can you do, so we talk appliances. Obviously you can do, walls or up kitchen or bathroom or whatever. What if you, and and this is just me, this might throw the whole conversation off when I start asking questions like this, but what if I wanted a pool?
Yeah. So the good news is for you that we really do specialize in renovation financing. So that might not be a great fit for a VA renovation loan, but we do have several conventional renovation loans that would allow you to put in an in-ground pool and do the patio around it and the fence and all the other stuff that you might need for that.
John, why don't I have a pool at this house?
Because you never asked. That's why. If you would have asked me for a pool, I would have given you a pool.
It's all about asking the right questions.
All right, John, I know you had some questions, like actually written out, not just what I'm doing.
So there is like no information online about the VA renovation loan. So obviously people come to me and they come to Dave all the time asking all these questions. Why is it that there's no information about this loan?
Yeah. So there is no true VA renovation loan. The VA did not set a series of guidelines and say, this is our renovation loan, this is how it works. But the VA basically said to lenders, here are some general parameters, and you have to hold the loan until the work is done, and then you can deliver it to us. So each lender who wants to participate in this program has had to come up with really their own set of guidelines for how that loan's going to work. So you're not going to find anything really published out there about it. But we wanted to make sure we had it in our list because, like I said, we really do focus on renovation financing and want to make sure we have everything there is to offer.
Awesome. And I know you mentioned earlier that the entire project, you want it done in 60 days. What systems do you have in place to make sure that the contractors are meeting their deadlines? Or do you guys help out at all? Or is it kind of all on the buyers? How does that work?
Yeah, so a couple things. As the lender, we don't get that involved, especially after closing, with the timeline with the contractor. So it's, as the buyer, right? It's your house, it's your money. We want to make sure you're comfortable with the contractor, and we want you to pick the contractor. So you're going to be handling all of the negotiations when it comes to pricing and timing with that contractor. But we do a couple of things. So before closing, we do touch base with the contractor a few times, and we make sure that they're aware of that timeline that they've got to get the work done by. And we have them sign something acknowledging that they're aware of that timeline as well. And then after closing, we will check in as work is progressing. Not only to inspect and issue draws to the contractor, but to make sure that work is getting done and that it will be done by that 60-day timeline.
And you mentioned that you typically recommend that that they're going to be picking the contractor. Now, do you recommend that they go off of the VA approved list, or do you recommend they reach out and they, to their own contractors and have them get VA approved? If so, what's that process like to actually get VA approved as a contractor?
So the VA registered list that you're talking about, there's really not a lot to getting on it. It's just a few pieces of paper that the contractor has to sign. We submit them, and then all of a sudden they've got a registration number. So the VA registration list, it's not a bad list to start from. It's a good list to start as a jumping off point. They don't have to pick somebody from there. So if you're thinking about doing a VA renovation loan and there's a contractor you love or that your realtor thinks is fantastic and you should use them, don't stress if they're not on the list now. We can get them on the list. It's really easy. It only takes like a day or two to get them on the registered list. And like I said, ultimately, this is your house and your money. So we want to make sure you're 100% comfortable. You can absolutely pick your own contractor. Every lender has like slightly different guidelines for what they look for contractors. We check to make sure that they're licensed if it's required. We want to see that they're insured. And we want to see at CCM that they've been in business for at least 2 years so that we know they have the ability to manage that project. I also recommend to people, do your research. Don't just meet these people in person, although that's super important to make sure you have a good feel for the contractor, but do online research too. There's so much available to us online right now. Check Google and Yelp and Home Advisor, and you'll see good reviews there. Always look at Better Business Bureau too. That's where the bad reviews will show up if there are any. And that kind of goes back to your point about how do you manage the project after closing?
Yeah.
You'll see in those reviews, if people were late, people will let you know, like, this did not get done on time. I was not happy. So, we have so much available to us now that it makes it a little bit easier to find out who you're working with.
Got it. Awesome. So what would happen if during this renovation process, obviously anybody that flips properties knows that not every project stays within the renovation budget. Let's imagine that you go to tear up the flooring to replace the floor and you find an unexpected expense that was uncovered that would exceed the maximum renovation financing. What would happen in that scenario?
Say it ain't so.
Because that's never happened before.
Never happened.
Flips always go perfect.
They always go so smooth. It's just like HGTV.
Yeah,
it's just like HGTV. People always ask me, "What if I have leftover money?" And I'm just like, "Hold on,
you wait.
Yeah. No, but it's true.
You would be lucky.
You would be very lucky. Count those pennies.
Yeah, that contractor is going to say it costs that much anyway.
Right. So we do a couple things before closing. Let's say you have your offer first accepted. We know you don't know that day exactly what your budget's going to be. It's just your best guess. And that's what we start the loan paperwork with. But through the process of the loan application, you are going to get a bid from a contractor who's been to the property, measured stuff, looked at stuff. So first and foremost, before closing, we will update your financing to reflect what that bid actually is. So you might have guessed, 27,000 and now it's 32. So we're going to update everything to make sure first and foremost that you have enough money to cover that bid. But that being said, you close, you open something up, you're going to probably find something. So we do also build in a safety net. Typically, it's either 10%, 15%, or in cases where the house is in, dire need, we might say 20. So if your bid is 30,000, you're going to have between 3,000 and 6,000 extra set aside as a safety net to your budget. So if something comes up, you've got a little extra to draw from. And if you get to the end of the project and you didn't have to touch that money, or you've got any money left over in your bid, you got a couple options. You could take the balance and just reduce how much you owe on the loan, or you could decide to submit a request to upgrade or add a project. So, lots of times we see people use the contingency to buy new appliances or paint a room or do some flooring, things like that.
That's cool.
Got it.
Yeah, I like that. I don't know where your question is going. I did have one. See, look at me not writing down questions and still coming up with them. So obviously we talked about 60-day, to get the project done is the goal. Curious what your closing timeline usually looks like on this comparatively, right? Because I know.
Yeah.
Okay, so I'm gonna preface this that this is a very cross-country mortgage thing. I know John can guarantee a 21-day close. I've actually seen him do faster. But most people, when they hear a VA loan, is like 30, 40 day, whatever, traditional closing lengths. But I'm curious, what you guys are able to close or would say is like a reasonable expectancy. Is it like a 45-day period to get bids and contractors? Is we looking like a 60-day close?
Yeah, that's a great question. And it's pretty much the same for all of our renovation products because my timeline revolves so much around that contractor estimate. And so typically a renovation loan in general takes 45 to 60 to close. And that's because I can't control the contractor. So assuming I've got a bid, assuming I've got a bid in 2 weeks, then I can order the appraisal that is coming back in about 2 to 3 weeks. And then we're about a week to 2 weeks to closing from there. So it really depends on who you pick up front. And people always ask me, I'm going to do this. I'm looking for a fixer upper. What can I do to set myself up for success now? And I always tell them, start researching contractors, ask friends and family, figure out who you want to work with, because once that offer is accepted, you want to be able to hit the ground running and get that person in to look at the property. And we could pre-validate someone too. If, someone's out shopping, they know who they want to work with, we can get that contractor validated to help it move even that much faster.
Cool.
So speaking of deadlines and things that never happen to flippers or anyone renovating a property, what would happen if the contractor missed their deadline? So they started lagging on the project.
Yeah. So if the contractor misses the deadline, we're going to do check-ins, right? It's not as big a problem for the customer as it might be for us as the lender. So we're going to have to do an appraisal again if we go past that 60 days to validate that the value hasn't really changed and that we've got the same after improved value that we had before. That's the big reason we're looking for that 60-day turn to finish the project, to make sure the appraisal doesn't expire in that timeline.
Awesome. I would also like to just butt in because I have a deal that's currently, and Dave, these clients as well. It's out in Hawaii, and just to show the awesome power of the VA renovation loan, since that's what we're calling it now, they bought a property for $950,000, and it was originally a VA loan. It wasn't a reno loan. The appraisal came back at one point. I'm not completely certain on these numbers, but it was around 1.2 million, I want to say, except it had a ton of conditions. And then eventually, we're like, okay, VA, we can't do this loan. However, we were able to flip it to a VA renovation loan, and they're able to walk into all of that equity. So with, $50,000 budget or whatever the budget ended up being, they're walking into $150,000 worth of equity in this property in Hawaii. And I mean, it's just an incredible opportunity that no one else can do with zero down, right? So I just want to share that win and kind of how awesome the VA renovation loan can actually be.
Yeah. Yeah, it's incredible. Cool. John, did you have any other questions? Was that, did we hit the window on this?
I think we covered everything that I wanted to cover. I really wanted to get into, the stuff that no one talks about. So I would say we're ready to move on.
Cool. Victoria, did we miss anything, or should we cut it here and roll to some Facebook Q&A?
Yeah, I think we can go to Facebook Q&A.
Cool. Let me. Well, I mean, I'm going to talk about this in marketing speak because I'm looking for specific things when I'm trying to find off market deals. But let's say you found the house where like little old grandma lived in it for like 60 years and died, and maybe not in the house. All right. So, although I don't think that matters. In fact, you probably get a better deal if you did die in the house. But you find the house that looks like it came from the 60s, 70s, 80s. Maybe it even still has like shag carpet, but it's in like perfect occupiable condition because this lady kept it in perfect condition. She cleaned the house every day. It was wonderful. You could move in today, but you could take the renovation loan and do carpet, paint, update fixtures, update cabinets, update, bathroom fixtures, whatever. You could spend like $20,000, $30,000 and you could jack the value of that home up a ton just by bringing it into the modern era. Cause it's not going to sell for like after repair value, but there's nothing wrong with it. So you could still get a really good deal and you don't have to that's in my head. That's like the perfect use for this is like, oh, this house is great, but we could just update it and it would be worth so much more. And we're walking into equity.
Yep. And now it's not only you're walking into equity, but now that house functions for your family. It feels like home. It's your house, So it's all around a great way to purchase property.
I just came up with a total screwball curveball question that might not even, I don't know if this is a thing, but this wouldn't work in like San Diego at all. But in say like somewhere that's affordable to build things, could you do like an ADU? Like, could you build like a tiny home with this?
So let's talk about it because ADUs are so big right now and they're coming up everywhere. And they actually are huge in California. And we're doing a ton of ADU builds in California. But more and more states and counties are looking for ways to help people be able to build that accessory dwelling unit that they could rent or have family move into because so many families are moving back in together. A VA renovation loan wouldn't be a great option for that, but we have 5 different types of renovation loans across country. And so that would be something that you would probably want to do in a conventional renovation loan if it's a detached building, or we do have 203K, which could do it as an attached building, but we do a ton of them and it's huge right now for sure. It's something that's spreading like wildfire across the country.
I love that. Now, to be fair, for those of you listening, you would, if you do 203K, you'd have to do 3.5. Conventional, I'm assuming, would still be 5% down, like a
5 or
conventional.
3, depending.
Oh, all right. So you'd still have to come up with 3 to 5% down. So, on $1 million home, $30,000 to $50,000. But that's a huge, like, that's awesome. I mean, that's for the amount of money you have to put down to be able to build like a, an additional unit on the back that you could rent out and then essentially cover a chunk of your mortgage. Like, that's cool.
And not to get off VA renovation, because VA renovation is so amazing for so many things, but VA renovation only works for purchase. Our other renovation programs all work for refinance as well. So if you own a home that you want to put an ADU on and it's going to increase the value of your property, again, we're lending against that future value of your house. You might not have to put anything down at all, bring anything to closing. You might just qualify to do a renovation refinance to add that on to the property and only be out the cost of whatever it costs you to get the plans to build the property, which we might also be able to reimburse you for. So there's lots of options.
So to answer your question, Dave, yes, you can have a pool.
A pool really and a guest house.
You don't want the pool. All you want is the hot tub. And then I'm never going to see you behind your computer again. Ever.
I would be the happiest man ever. And I am going to get a hot tub because I'm going to Airbnb room out of this. And, obviously if I Airbnb a bedroom, then everybody knows hot tub equals better Airbnb. So it's not for me. It's for the guest.
Yeah, of course.
Even if it's a 6-bedroom house and they're in one. Oh man. That's so I'm like in my head, the wheels are turning now. Like, so if I had bought a home with VA loan, like 3 years ago in San Diego County. And now said home was worth $100,000 more. And I wanted to just refi into a conventional, which everyone talks about doing anyway, so that I could recoup my VA loan for a future purchase and maybe even do one-time restoration. But I took the conventional and I built an ADU onto the house. And because the value increased and then the future value increases, I come out of pocket zero down. So I bought a house zero down 2 years ago. I'm still zero down and I have an ADU to rent. Now I have 2 or however many extra. Oh my goodness. My head is like again. 3 years down the road already, blowing my own mind.
So Dave wrote a book on how to build wealth in the military, and he completely left this entire part out.
Yeah.
So Dave is now going to have to rewrite the book on how to build wealth and achieve greatness in the military.
It's no longer through house hacking. It's through house hacking and building extra units on with the bank's money.
Correct.